Welcome. Lovely to see you again, Brian. So I know last time we met and last time you were on a panel, which was a while ago, you had a startup and had come out of BBVA. Do you want to talk a little bit about what happened with that?
Sure. That was Aslo, which is part of the BBVA corporate venture portfolio, and still doing quite well. That's, I think, the fastest growing challenger bank in the microbusiness space in the U.S.
Wow. Congratulations.
So doing quite well. And very proud of actually what we were able to build there.
Yeah. And so now you've got SafeCorp technology.
Yep. SafeCorp's its holding company name. It's not actually the brand of the product, as you might imagine.
Yes, you did tell me that.
So it's still, I wouldn't call it stealth, but not publicly available yet.
Okay.
So we're still building the platform. We think there's an opportunity to do something a little more fundamental on the financial product side.
Okay.
Under some of what is currently the digital user experience innovation that's happening in the space.
So is it a white label sort of product?
It's not a B2B product.
Okay.
It will be a direct-to-consumer product.
Okay.
But a little bit more vertically integrated to the financial core. So a little closer to the rails.
And so what's your overview of what's happening with the challenger banks now as regards the incumbents?
Well, there's certainly more of them, right, as far as challengers go.
Since I saw you last, definitely.
I think they're starting to nibble at the heels of the incumbents a little more seriously, and they're certainly, I'm sure, paying attention to that.
Right.
I think the challenge so far for the challengers, no pun intended, is that they've been relegated to a fairly specific customer segment, all right? The younger, kind of simpler financial life, which is certainly an up-and-coming segment that the traditional financial institutions need to get a hold of, right? That's going to be the next set of customers as they come up. But the challengers have had less success breaking into the more traditional bank customer, the head of household, the family, the primary bank relationship as it exists in a more traditional sense.
Right.
So I think that's where still most of the relationships and certainly most of the revenue dollars are as far as financial services is concerned, and probably where a lot of the opportunity still lies.
Great. And as far as the future goes, what's your personal vision of where all this is going?
It's going to start to get real now, right? As with most technologies, it takes a few years to kind of mature and become meaningful enough and stout enough to withstand some of what I think is happening. I think the traditional players will start to have to pay attention, particularly in some niche areas where they've essentially ignored some specific segments.
Yes.
I think the big variable is going to be the macroeconomic environment. Obviously, some of the big players are better funded and better healed to weather a storm.
Okay.
And I think that's where a lot of the shakeout will probably start to happen in the challenger bank space as well.
Okay.
That being said, some of the traditional players may not survive one of those quite as well as they used to either, because there's...
You think the government won't bail them out again?
Probably not as willingly, right? I mean, potentially in an extreme scenario, but I don't think it's going to be, I don't think it would be the same situation as it was.
Of course.
But I also think the appetite for it, or even the competency to do it in short order, might be in question this time.
Yes, definitely.
That said, there are probably still too many banks, right? You probably don't need 5,000 or 6,000 of them to serve customers. And as is shown now by some of the digital first and digital only players, you can do a fairly good job without the physical infrastructure if you know what you're doing.
And I know in Ireland, I was in Ireland when the crash happened. I had a business there, and all the Irish banks went down, and the government propped them up, of course, like it did in a lot of Western countries. And then the whole country had to take pay cuts. Which I just think was devastating, that everyone had to suffer and the banks were propped up. So I've had an Irish VC say her piece about that on a video interview I did, and we've had so many hits on that. She said no one could make as much a mess as the Irish banks did. So, I think really it's when I was young, many moons ago, you would look at the banks as sort of institutions that would never fade, but I think now there's definitely a sense that they can be replaced by better products. Do you think that's the case?
I mean, banks will always have a place, right? I think as the financial backstop more broadly for the economy, you're going to need official banks and central banks and managers of currency and monetary policy. Whether or not you need tens of thousands of commercial banks all paying tens of thousands of employees to deliver things through aging and expensive physical infrastructure?
Yes.
Probably not.
Yeah. And that's the case in the US, right?
That's correct.
Yeah.
And so I think there's certainly an opportunity there to be more efficient. I don't think banks are going away. I think like most industries, they probably will benefit from a bit of a shock.
Yeah.
I don't think they've really had that shock yet, though. I don't think the challenger banks have really taken a bite out of the core customer and or impacted the core business of the financial institutions, the traditional financial institutions, as much as they can and probably eventually will here.
Yeah.
So I think the game is starting actually to get played now that some of them have reached some scale.
This year definitely seems to be the year of the challenger banks, I would say.
Yeah, and I think it's a healthy thing, right?
Yeah,
I think not all of them will survive, but I
Yeah.
think it's an existence proof in the market that there certainly is a market. I think profitability will be another metric to pay attention to, like who can survive and actually make money doing this.
And really, tonight I just learned for the first time that the US has got unbanked people, which just is amazing to me, and that there's banking deserts where banks are closing down and the
branches are certainly
banks.
going away, right?
Yeah.
And so I think the receptivity to digital first banking is as high as it's ever been.
Great.
You still have to have a credible offering. You
Yeah.
still have to do everything that a bank
Yeah.
would do for you, and most of the existing offerings don't. They focus on a narrow niche, which is important to get out the door and prove traction, but few of them are viable whole part replacements for your existing primary bank relationship.
Amazing.
And even more, I think, of an opportunity than the unbanked in the U.S. is people that are banked but not well.
Yes.
Right. So the middle class, for example,
Most of us.
it's people that essentially went to school, got a degree, have a good job, or the household breadwinner or breadwinners, and still are essentially feeling like they live paycheck to paycheck. And the bank's not helping them out a whole lot.
No.
They're not doing a whole lot extra for them. They're happy to charge you a fee here and there, and not really there when you need the credit. And I think that that's really where the opportunity is to do more for the average person, right? And there are opportunities for sure in the underbanked and or subprime market. There are inefficiencies there. The super prime wealthy customers are overbanked by all measures.
Yes.
And somewhere in the middle, you've got like normal people.
Yes.
Who aren't really particularly well served.
Yes.
And I don't think yet have a viable alternative to your traditional bank account from your brick and mortar bank. So I think the game has yet to be played, but I think it's starting to get more interesting.
Fantastic. Well, I'm looking forward to the panel, and thanks again for coming.
You bet. Thanks for having me.